Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4-hour chart on Coinbase. And last time we spoke, guys, Bitcoin was trading right in here at about 9,100-ish. I told you the two areas that we're watching, guys, is 8,800 and 9,400. These are the two major zones for me. If we break 8,800 to the downside, I do think it's a decisive break. By decisive, again, I mean a 4-hour candle. We're looking at the smaller time frames. 4-hour candle opening and closing below 8,800. I do think it's a quick drop down to 8,500. Conversely, to the upside, if we get a 4-hour candle both opening and closing above 9,400, I do think we come up and at least test 9,600, but I think a more likely scenario is going to be around 97, 9,800-ish, somewhere thereabouts. Now, last time we spoke, I was not ready to call this an ascending triangle. We had talked, guys. I was looking at this wick. It was a very, very sloppy pattern. Nonetheless, every time Bitcoin did come down here, it got bought right back up. This is very, very bullish. This is the kind of thing that you want to see. And since that time, we did have price come back up, come quickly back down for a retest, and then we came back up to test the top of our zone right almost at 9,400. Not quite, but you know, close enough. So this does confirm to me that that this is in fact a rising. Or excuse me, an ascending triangle, which is a bullish triangle. Now, does that mean that it has to break to the upside? No, that does not mean it has to break to the upside, but it certainly does mean that probability is now favoring a break to the upside. And it does look like that may happen fairly quickly. Let me zoom out here to the daily. Yeah, zooming out here on the daily, guys, obviously we can see that we saw it on the 4-hour as well. We can see that we're getting squeezed here tighter and tighter, approaching the apex of this wedge, guys. And as you get closer to the apex of any wedge, obviously you're expecting that larger move. And we are certainly approaching that now. And I would say this thing could break out anytime in the next 48 hours. And probably sooner rather than later within that time frame, in my opinion. Again, doesn't mean it has to happen, just means, you know, probability wise, it looks like it will. A break to the upside, as I said, guys, if we zoom all the way back out here to the weekly, I know I've shown you guys this before, but if we zoom out here to the weekly, guys, we can see that the real prior swing high was, you know, we've already taken out this last swing high. So the one prior to that is going to be this one here, which brings us up to about $9,950, somewhere there about, give or take. And, you know, give or take, you know, $5, $10. So right around $9,950. Now, is it going to come up right to this zone? It might. It actually might. I know I pointed this out last time, and it's kind of funny to me. There are some people that get a lot more subscribers than I do, and every time anyway, every time I seem to point something out, their next video seems to point out the same thing, which I'll just leave it there. All right, so if I go swing low to swing high of this entire structure from the all-time high of right around $20,000, 19,950-ish, down to our swing low of $3,150, we can see that we're hitting, and again, I pointed this out last time, perfectly right there at that 382, which coincides very, very nicely with what we could visually see as an area of potential resistance on the way back up here, and that's of course what we're hitting now. The next major area above that I'm going to be watching for, as we discussed, is this 99.50. But the next major fib level isn't up here until we get to about 11,500, and it goes from about 11.5 to about 11.7. That's going to be a major test for Bitcoin, in my opinion, guys. If we can get above this, guys, I do think that you know, sky could be the limit here. We'll have to wait and see how it plays out. But certainly, it does look like if we can take out 10,000 decisively, and this is why I've told you so many times in the past, I think one of two things are going to happen. We're going to either break up here and wick right around 98, 9,900, not hit 10,000, and then get a pretty strong rejection off that zone. Or we are going to break through 10,000 and not even acknowledge 10,000. We're going to break through it like butter, and it's not going to stop until, I would assume the first area that we find some resistance would be at about 10,400. And we'll have to reevaluate right around 10,400 to see how it reacts. But again, once we get decisively break above 10,000, the next major fib level, the next major area of resistance isn't until about 11.5. All right, sorry about that, guys. I had to pause the video real quick and take care of something. Okay, so zooming back in on the 4-hour chart here, one of the things that is concerning me here, guys, is yes, this is a bullish pattern. Looking at the micro level, this is a bullish pattern. This does look like it wants to break up. And again, I would put a target somewhere around uh, really the top of this zone. I think the lowest would be about 9,600, but really the target of this pattern lies somewhere around 97 to 9,800, which again would make sense to find a top somewhere around there and then possibly reject off that zone and then continue down. And I do think that again, one of those two things is going to happen. We're either going to reject hard right between 97 and 9,900, maybe 9,950 for a perfect double top, possibly rejecting top hard there, or we're going to blast through 10,000 like butter. I seriously doubt we're going to come up and perfectly hit $10,000, even though that is a nice psychological number, guys. I think a lot of people are going to be front running this. But one of the things that is bothering me here, number one, we're seeing a massive drop in overall volume. We're sitting at about 16 billion, from the all-time high, which was somewhere around 33 daily volume. We're referring to was about 33 billion for the day. So we're at about half that. Now that could change any time now, but we haven't really had an influx in volume. Much at let me catch that. Okay, we haven't really had an influx in volume, guys, over the last a nice influx in volume recently. So it does suggest possibly slowing down. But if I pull out here on the 4-hour, the 4-hour here wants. It looks like if this thing does break to the upside, it looks like it's going to quickly start to show some bearish divergence. So we'll have to wait and see. I mean, again, nothing is written in stone until it actually happens. But it does look like could this thing top out? Yes. Would I get greedy here? No. Absolutely not, guys. I would. This is the point to where you want to consider taking some profits. You want to consider. I mean, if you are going to try to ride this thing out, at the very least, if you've been holding Bitcoin, increase your stop loss. We still have not had that 35 to 45% correction that is very, very typical of a move like this. Doesn't mean it has to come, but probability says eventually it will. So we'll have to wait and see how this ends up playing out. I'd be very, very surprised though if this thing just went parabolic, from now all the way through that $11,400 number that I referred to earlier. I think somewhere between its current price point and 11.4, we are going to see that larger breakdown. And you really need to do your. I can't tell you what to do. I'm not a financial advisor. It's not financial advice. But risk assessment, guys. Risk to reward. Lock in some of your profits, increase some of your stop losses, guys. That's what I would do. And again, this is not financial advice, so you have to do whatever you think is right for you. All that being said, on a micro level, this does look bullish. This does look like it wants to kick up. On a macro level, long term, it's very, very bullish. But it doesn't mean it's not going to correct, and that is healthy. A nice healthy correction would be good for Bitcoin here. But again, it does look like it wants to break up here in the short term. Let's check moving averages. This is on the daily. Of course, we're sitting right at the top of the upper Bollinger Bands here on the daily moving averages. Exponential moving averages look extremely bullish posture here, guys. We've got the 8 exponential above the 21, above the 50s, fanning out here, guys, which does, you kind of think of this as the more distance you get between the 8 and the 21 and the 21 and the 55, the more gap there, you could think of that as kind of a cushion. So if price does end up correcting here, guys, you can think of this as kind of a springboard. The more gap there is, usually the more support that you'll find down below here. Pulling into the 4-hour, Bollinger Bands here are starting to tighten, are starting to bottleneck here. We're getting the 21 and the 8-day EMA and the 21, or excuse me, the 8 period. We're on the 4-hour chart. The 8 exponential and the 21 exponential starting to converge on each other. Again, that does suggest a larger move likely to come in the very near future. Let's go ahead and check the weekly. Pushing the top of the Bollinger Band, not getting above it there, guys. So, not the kind of strength that we were seeing back here in May, but still, nonetheless, guys, this is overall is bullish, guys. We are trading above the close of the last weekly, and we have taken out the prior high of that weekly. Now we're slightly below it now, which again could signal a slowing down in steam here, guys. Or we could just be reaccumulating for another move up. But and again, I do think that probability says we are going to come up and at least test 9,600, if not that 97 to 9,800, which would be the target of that smaller ascending triangle that we talked about. But the weekly overall does look bullish. Pulling out on the monthly is, I mean, the monthly is just extremely bullish, guys. Long term, this is extremely bullish. Have a nice, call this a hammer call, what you will. This is a very, very bullish looking candle for this month. We are trading above, obviously above last month's, not just last month's close, but last month's wick. The top of that wick, last month's all-time high. So, I mean, again, this is extremely bullish. But one of the other things that I want to point out here, guys, that is, in my opinion, extremely relevant. If we look at on the monthly chart, prior to us bottoming out here, the last swing high was in July. This was the last swing high on the monthly chart. So if I come all the way up to that swing high, which is right there, and I draw a little line, which, I'll maybe move it over to that, on the monthly there. There we go. Which is right there. Do you see anything that looks relevant? We can see that this month came up and then closed just below. So in other words, May's candle found resistance right at the top of the prior swing high in the bear market, of the last swing high of the bear market. And then what happened? And then we've got this month. June's candle broke up above it and is now finding support. So we have what was resistance turning into support. Now, even if this support does break to the downside, there's no question this is extremely relevant and this is extremely bullish. Even if we get a nice healthy pullback here, guys, this is very, very relevant in my opinion. So, just wanted to kind of point that out. I find it extremely, extremely interesting here. So we do have very, very bullish posture here on the monthly. We've got the 8 monthly EMA now crossing above the 21, which is above the 55. So we're now seeing that bullish posture, not just on the daily, not just on the weekly, but now on the monthly, which again, long term on a macro level, guys, this is extremely bullish, even if we do see a temporary pullback here in the short term. All right, so to wrap this thing up in a bow, how am I going to play this, guys? To the upside, I'm looking for an open and close above that 9,400. If we do get that open and close above 9,400 again, I think it's going to rise at least to 9,600, guys, but I do think very likely we're going to hit somewhere between 97 and 9,800, and that would be the target if we did a measured move off this ascending triangle here. To the downside, again, remember, just because probability favors to the upside, guys, I always want to give you the opposite view because, nothing is certain in crypto. All you can do is have a plan and then execute that plan. And don't be reactionary in the sense that you panic when things don't go your way. Have a plan for any scenario and know what you're going to do, and then just execute that plan. If you just do that simple thing, I promise you, you will be ahead of 99% of the traders that are in this market. So just have a plan. So to the downside, yes, probability says we're at least going to hit 96. If I was a conservative trader, that's where I'd be taking profit. If I'm going to be a little more risk averse, then if I'm a little more risky, want to take on a little bit more risk and converse a little bit more profit, then I'm going to be targeting somewhere around 97 to 9,800. Would I get greedy here? Absolutely not. Could this thing take off through 10,000? Yes. Am I planning on it? Am I going to bet on it? No, I'm not going to bet on that, guys. I do think there's a good chance we reject somewhere between 97 and 9,800. So just be very, very, very careful. But to the downside, guys, just a plan if this thing does not go as planned and we do end up breaking down, which, the volume is low enough to where market makers, they could be painting a bullish pattern here just to fool everybody to break to the downside. So be very cautious here. If it does end up breaking to the downside, the magic number, in my opinion, is going to be right around 8,000, as I discussed last time, right around 8,800. I do think if we break below 8,800, I do decisively a 4-hour candle opening and closing below 8,800, it's going to be a quick drop down to 8,500. Now, I realize some of you are going to want to front run that. So yes, if we do decisively break down below this ascending support line here, not a wick like we've seen back here, guys, but a decisive break. By decisive, I mean if we get a 4-hour candle both opening and closing outside this ascending support line, then yeah, would you want to front run this thing, possibly dropping? I do think at that point it's going to very, very quickly drop down to at least 8,900, where I'd have to reevaluate that. But yeah, it would be at least a drop down to about 8,900 in my opinion. Whether or not you want to play that, of course, I'm not a financial advisor. I just give you the information, and you do with that what you will. But I don't think this thing. I think there is a chance we could come back down here, test as low as 8,800, create a nice little bear trap, and then just completely reverse back to the upside. Now, would that be probable if we broke down here? No, but would it still be possible? Absolutely, which is why more conservatively, I'd wait for that decisive break below 8,800 before I'd start shorting down to at least about 8,500. And remember, 8,500 would fill that first gap on CMEs, so that is a real scenario. And even if we do end up breaking to the upside, I do think eventually that gap is going to be filled down to about 80, at least 8,500, if not that $7,200 to $7,000 gap that sits down here as well on CMEs. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.